Happy spring, everyone. I'm Jen here with Serena.
Hi.
And Darryl.
Hello.
And we are excited to do another market update for you here on the Central Coast. Darryl has some exciting news that Serena and I have been excited to hear about. Before we have Darryl share his exciting news, we are going to give you a quick market update from the California Regional MLS of March stats. So Serena, take it away.
Thanks, Jen. March 2023, the median home price jumped to $807,000, which is a big jump from last month of $750,000.
Wow.
So amazing.
Yes,
Cheers to
nice.
that.
Cheers. This is the highest median home price we've had since September of 2022. Sellers, this is great news for you.
It's a great time to be a homeowner.
It is. It always is a great time, right? Yeah. 4 months of inventory in March. It was at 5 months. The average number of sales rose from 146 in February to 201 in March. Days to sell is at 43, which is slightly faster than last month at 45.
Serena, that is great news. The market is clearly heating up, so that is really good news for sellers and of course buyers too, because we're seeing more inventory out there as well. Speaking of buyers, Darryl, can you give us a little insight on the new California Dream program?
Sure, I'd be happy to. First of all, I just wanted to mention that I think there is a broad misunderstanding out there that most folks think that you need a 20% down payment to buy a home, and that's simply not the case. Yeah. There are many different loan programs out there to help people to get started, especially for first-time home buyers, including down payment assistance. We also have 100% financing programs here in our area, which can be very helpful to those just getting started. The California Dream for All loan program has been a hot topic in our area. It's through CalHFA, which is a state agency, not federal. The thing about it is they have very limited funds, so there has been a sense of urgency with that program, because with CalHFA and some of these down payment assistance programs, they can be funded, but then they run out of money. Whenever I talk to a client, I feel like it's important to ask that question: do you have a down payment saved? And if so, how much do you have to work with?
Right.
And then we begin to build around that. These programs are wonderful and can be used, but it's great to have a fallback plan. The California Dream program, it was rolled out March 27th, and they likely will be exhausted of funds next week as early as April 10th, which is amazing because they started out with about $300 million, but we are competing against other marketplaces like Sacramento and Los Angeles, where there are many more listings. Anyway, that money has gone quick. With the California Dream program, it's down payment assistance, it's a conventional loan, a first trustee loan. The down payment assistance is a second trustee loan. It's interest-free, it's payment-free, and you keep that loan up until the point that you refinance or sell the house.
Okay.
So hypothetically, if you have a $500,000 house, they would provide $100,000, 20% down payment. Therefore, that loan would have no mortgage insurance, and the rates are great. It's a conventional loan currently at about 6.125% interest rate. The thing that's unique about the program is that it involves equity sharing. So what that means is that when you go to sell that home, and if there's appreciation, you would have to not only pay back the down payment assistance, $100,000 in our example, but if, let's say, you bought it $500 and you sold it $600, that appreciation would be $100,000. You'd have to pay back 20% of that, or $20,000, total of $120,000. In a perfect world, it's wonderful if you have a down payment saved, or if you have access to a gift, or have a fallback, perhaps borrowing from a 401k, that type of thing. For those that may not have that option or prefer to use something like that, it is a great tool, but again, the funds are very, very limited.
Okay. Heard you mention that you have 0 interest rate until you refinance. So if you refinance and your equity did not cover the cost of the loan, how does that work?
That's a great question, because sometimes prices go up, sometimes they go down. Real estate is cyclical, so you would have to be in positive territory to be able to pay that down payment assistance back. If not, it would create a short sale situation. Okay. So there is some risk to that. That's called market risk.
Definitely. Yes.
How would someone qualify for the California Dream program?
The program is specific for first-time home buyers, and to be a first-time home buyer in the state of California means that you have not owned a home within the last 3-year period.
Okay.
And there's also income limits. So on the California Dream program, the limit is a household limit of $216,000 per family.
Okay.
So if you have a family that makes more than that, it is possible to qualify as an individual versus a couple. Any loan that we look at, it's like a puzzle. We really have to look at it from all sides, whether it's the California Dream program. You know, there's other 100% financing programs out there, for instance, USDA, VA, FHA financing, which is a minimum of 3.5% down payment. And typically, if it's a conventional loan, it would be a minimum of a 5% down, although some loan programs, conventional, allow as little as 3% down if you meet the income guidelines.
So Darryl, what else are you seeing in the lending world? How are rates looking?
Interest rates look great. I mean, sometimes they're up, sometimes they're down.
Yeah.
But I would say on a conventional loan, they're typically in the low to mid sixes. Some of the rates, depending upon the scenario, might be up as high as 6.75% range, or maybe higher if it was a second home or investment property. But most of them, the conventional loans are pricing in the mid 6% range right now. An FHA loan, conversely, those loans that are government subsidized typically have a little bit lower rate. And I've been seeing rates on FHA as in the mid 5% range, which is pretty exciting.
That's great.
That's very exciting.
It's been a while since we've been that low.
Yeah.
I agree. There's reason for optimism.
Yes.
Yes.
Love that.
Darryl, is there anything else that you'd like to share that we haven't covered today?
I think it's important to get pre-approved in advance because there are many different loan programs out there. A loan is like a four-legged stool. There's 4 different things that make up the criteria for that loan decision. Income, assets, credit, and property. Those 4 things make up a loan decision. So it's important to get pre-approved up front. And if you think about it, a stool can stand on 3 legs, but I have to make each one of those legs really strong. If the soft spot on that loan is assets or maybe their down payment challenged, we can help. We can offer some suggestions to help that along. If credit is an issue, then it gives us time to discuss, whether or not if you have any collections or things like that, or if you need to pay off debt to qualify to make it that much easier to qualify for more home. We look at income just to make sure we can document income to qualify. And in some cases, it might be a challenge for someone that's self-employed. And ideally, that self-employed client has a 2-year history of being self-employed. And then the last thing is property. The property has to qualify just like the borrowers do. That home should appraise, it should be livable, it should be safe, that type of thing. We want to make sure that your buyers get a safe home. There are different products out there like renovation loans that can help to remedy that type of situation.
That's great info. Thank you.
Thanks, Darryl, for all that great information.
You're welcome. I'm happy to be here.
Our market is continuing to heat up. The prices are on the rise and a great time for sellers. Buyers, it's also a great time for you to get in the game. Spring is here and more inventory is hitting the market.
Thank you all for tuning in. If you are thinking of relocating to our beautiful wine country, please click the link below for our free relocation guide. You can also reach out to Darryl, Serena, or myself anytime with any real estate or lending questions. We will see you next month for our next market update. Cheers.
Cheers. Happy Easter.